Bitcoin is stabilizing, stocks are back at record highs, and oil has dropped sharply. And the biggest reason is dramatic shift in the geopolitical sentiment. Now, over the next 5 minutes, I'll explain what exactly has happened over the week, why markets suddenly become more optimistic, and what you should be watching for next. So let's get straight into it. And now the biggest story that we currently have this week is actually not Bitcoin. So it was the geopolitics. So earlier in the week, markets feared the tensions between the United States and Iran could escalate into a wider regional conflict. So whenever investors actually worry about war, they typically move money into safe haven assets while selling riskier investments. And now over the past 5 days, the narrative has actually changed. Markets increasingly began pricing in de-escalation rather than escalation, and investors now believe that neither side has actually wanted a prolonged conflict. So diplomatic changes actually remain active, and the immediate threat to global oil supply has actually eased. Now that single shift changed tone across nearly every major market. And now once again, geopolitical fears cooled down and money flowed back into equities. So the S&P 500 actually recovered and technology stocks led the rally. And investors actually shifted back into what's known as more of a risk-on environment. So instead of focusing on war headlines, markets have actually returned to watching earnings, artificial intelligence, and economic growth, and then finally, obviously, the Federal Reserve. So we've gone from a risk-off to a risk-on environment in the space of these 5 or so days. And our Bitcoin has actually followed this same exact pattern. So during the peak of uncertainty, traders became more defensive and volatility actually increased. But as geopolitical concerns actually eased, buyers started returning and Bitcoin actually stabilized. Currently, we are trading between 60.4K and 58.8K. So currently, yeah, we do have a pretty nice level here. Yesterday, we actually dropped below, but today you can see we've just reclaimed it at the US market open. So, and then also Ethereum and many other large cap altcoins also bounced back alongside Bitcoin. So what's more important now is that crypto is actually shifting back toward the microeconomic drivers. So the market is paying much more attention to the interest rates, liquidity, and institutional demand than the geopolitical headlines themselves. And then also the ETF flows do still remain one of the key indicators to watch over the next coming weeks. Now oil has actually seen probably the clearest indicator of changing expectations. So earlier fears centered around possible disruptions to shipping routes on the Strait of Hormuz, and as those fears eased, crude oil prices actually moved lower. So lower prices help reduce inflation pressures, which is generally positive for both stocks and cryptocurrency. And then on the other hand, gold has also pulled back slightly as investors rotated away from the defensive assets and back toward growth opportunities. So what happens next? Now, if tensions rise again, expect volatility to return quickly. And now inflation and interest rates. So lower inflation could actually support additional gains in risk assets. And now as for corporate earnings, strong earnings, especially from AI companies, could keep stocks moving even higher like we've previously seen. And then finally, we have the Bitcoin ETF flows. Now, institutional buying remains one of the biggest long-term drivers for crypto right now. And we'll actually see how we go in these next couple of days or weeks. And now overall, my takeaway is that markets have actually shifted from fear-driven trading back into macro-driven trading. So right now, investors believe the worst-case geopolitical scenario has actually been avoided for now anyway. And well, that has actually created a healthier environment for equities and cryptocurrencies. And now as for Bitcoin, I'd describe the outlook as constructive but cautious. So if liquidity actually improves and institutional demand actually continues to build, there's room for higher prices. But geopolitical risks haven't actually disappeared, so volatility could return very quickly if new headlines actually do emerge. And for now though, the market is actually breathing a little bit easier. And now before you guys go, let me just talk to you about Evedex. Now Evedex is a platform I've actually been using for many months now. And it's a very full platform. You can obviously learn on there, you've got free courses. Then we've got obviously funded trading. So for a small fee of 50 USDT, you can get a 1.5K account with 0% profit share. I could go on and on what we have available, but tune in to the live session and I'll tell you exactly what we have going on in there. So with that in mind, that is actually where we are on the market overview. So if you guys enjoyed the video, of course, make sure you drop a like, hit that subscribe button, that'll be greatly appreciated, and I'll see you all in the next one.